Welcome back to Nasdaq Trade Talks. I'm your host, Jill Malandrino, global markets reporter at Nasdaq, and this is one of the most important closing auctions of the year. Joining me live at MarketSite, we have Bundy. He's the managing director over at FTSE Russell, and we also have Mike Sokoll, senior managing director on Nasdaq Stock Market. Gentlemen, thank you both for joining me today, and it really is one of the most important closing auctions. Ron, tell us why. What is the Russell reconstitution all about, and why is it so important?
Well, this is a really exciting day for us, Jill. Thank you for having us on the program. The Russell reconstitution is very important because there's $9 trillion of investor assets that follow the Russell U.S. equity index family. And every year on the third Friday of June is the year where we refresh and recalibrate the entire index. So you see companies moving from the small cap Russell 2000 to the large cap Russell 1000 and vice versa. And you also see shifts in value and growth. As investor sentiment changes year over year, we recalibrate the index to make sure that the Russell 3000 remains the market proxy for investors of all types.
All right, and Mike, how does the Nasdaq closing cross fit into this, and what exactly is that process?
Yeah, it's relatively important. On any given day, any stock on Nasdaq can have a closing cross, but particularly for days where you have a big index rebalance, you want to have a very organized process for arriving at that closing price. So the basic idea is don't just turn off the clock at 4 p.m. and say, hey, whatever the last trade is the closing price. You want to aggregate order flow. So throughout the day, people can put in orders to buy and to sell and direct it so that it happens at the close, so that they want to get that closing price. And we aggregate all those orders throughout the day, and we pretty much match up the buyers and sellers. The important thing is there's a lot of technology behind it. So if there's an imbalance on one side or the other, that's getting communicated in data feeds to the street, and people can offset those imbalances. Helps keep pricing orderly, helps minimize volatility. And on days like the Russell rebalance, we've done, and we'll probably get close to it, 1 billion shares in less than a second. So
I was going to ask you, it only takes a second for this process to take place.
That's correct.
All right, so Ron, back to why reconstitute the index?
Yeah, well, it's really important for investors of all types because there are changing sentiments in the marketplace. You see shifts between value and growth, large and small, and you want your index to really be the truest reflection of an investable universe, and that's what the Russell 3000 is. So by reconstituting the index every year, and to Mike's point, this is probably the largest liquidity event, certainly in the US and maybe globally, where investors come together on this rebalance, and that benefits everybody because it makes the trade go so much more smoothly when you have all the market participants coming together at the same time.
So we now know what happens on the trading side. Do asset managers actually prepare for this event?
Absolutely. And so we've designed the indexes to be extremely transparent. We share a lot of information with the investment community. So 2 weeks before the actual reconstitution day, which is generally speaking the third Friday of every June, 2 weeks before that, we publish what we call the preliminary list. So asset managers can see, and really all investors can see what's anticipated to come in and out of the index and the changes. A week later, we do an update of that as we take market information in. And so asset managers have a really great window of transparency to see what's anticipated to come in and out of the index, but they also have time to decide how they want to manage that trade.
And Mike, what does Nasdaq do to prepare companies for the annual event?
Yeah, we spend quite a bit of time speaking to companies by phone, by email, even with the Russell folks for 7 years running. We've done a web seminar to alert people that it's coming, number one, and number two, just to prepare them so that they're not surprised. Let's say they see a big trade and they think it's an activist or something like that. We want to let them know that there's a big event happening, that likely they're going to see potentially a full